terms of the deal. You see that a lot of the risk factors here are in all caps. Again, you are anticipating the time when you are sitting down in front of the judge, and the judge is saying, well, this guy's claiming fraud, what do you have to say to your defense? And your response is going to be, second page of the document, Your Honor, all caps. Highly speculative. We warned the guy, you can't get on our back. All right, this doesn't really do anything for the transaction, but it covers you in case of all scenarios. If you take a look here, selling commissions. Look, they want to raise $2.5 million, and they're giving away $250,000 in fees to the person who's raising the money. That's 10% of your money. That's pretty high. Normally an IPO would be 7%. Here they're asking for fully 10% selling commission. Again, you've got risk factors all over the place. PPM is not required. Form D is required, not a PPM. Remember we went in there, we showed what was required, that if you're going to have non-accredited investors must be provided with information similar to that received by public investors. All right? That's how the idea of the PPM came up. Not required if you don't have non-accredited investors. But as I mentioned to you, lawyers will generally tell you, don't have accredited investors, but still have the PPM. It's a risk document. We are a litigious society. $8 billion per year in fines charged to businesses because of violating SEC rules. That came out of the report that we started with at the beginning of the session. Okay? Table of contents, obviously, and going on through the report. And you see the way that this one was set up. You see the blank lines? Fill it in. This is the easiest way of doing a PPM. Lawyers will charge you, we've been out there, we've seen prices from $5,000 to $10,000. I'm sure you could spend easily $100,000 if you had, Fried Frank or one of these high-priced law firms build you a PPM, right? You can go on the internet, download a PPM, and fill in the blanks. They're not required. Okay? These documents are here for two reasons. Number one, to help sell the deal. Right? You need something to give to an investor so that they can see what the company's about. And number two is to protect you in case of a lawsuit. And let somebody else do the thinking. All right? So, moving forward. All right. Using a private placement memorandum. What is required? A sound business plan. One of the things that you need to be aware of when you're writing a PPM is that you need to be able to convince the investor that your idea is going to make money. All right? So what would be a hallmark of a good business plan? It'd be understandable. Ever heard of the 30-second test? If you can't figure out a business plan in 30 seconds, don't keep listening. There are some very persuasive people on Wall Street. They're called salesmen, all right? And their whole job is to get you to buy things, okay? If you can't understand why it's a good idea in 30 seconds, that does not mean that you won't think that you understand it after a half an hour. But as a general rule, if it takes you more than 30 seconds to get it, that aha moment, it's probably not a good idea, okay? Anyone here ever read the book called Blink? Yeah. Right? Great book. Changed my life. I used to run a biotech fund over at Alliance Capital. And I look back at all the bad decisions that I made. I can't tell you how many of those decisions started off with a bad feeling. You just say, I'm not sure. And then the analyst convinces you that you should do it. I'm not sure. And then the investment banker convinces you should buy the deal. Doesn't quite make sense to me. And then after half an hour, yeah, I guess I get it. Blink, 30 seconds. A good business plan, blah, blah, blah. A good business plan is one that you should be able to get quickly. 3 points, it's out, and you understand it. Another thing about a good business plan, it should be unique, right? It should be something you haven't necessarily heard of before. If the business plan starts out with something along the lines of, I'm going to open a McDonald's fast food chain in New York City, not unique, right? McDonald's franchises have been around for decades. New York is saturated. If their idea is to do something that lots of other people have done before, it's the old efficient markets hypothesis, right? That opportunity to make a dollar has already been discussed by lots and lots of people. That dollar's probably been made, right? It's going to be unique and it's going to be understandable, okay, in 30 seconds. Now, there might be more detail behind it, but the concept you should be able to get in 30 seconds. A private placement memorandum discloses the full facts of the investments in the business. Okay, there is a difference between a private placement memorandum and a research report. A PPM should be about facts. A research report should be about facts and opinions. Remember, the basis behind the PPM is that non-accredited investors must be provided with information similar to a public or registered offering. Okay. So the whole idea here is, it goes back to Joe Kennedy's admonition that the SEC is about making sure that investors are provided with all material facts. But the SEC does not pass judgment on whether or not a given investment opportunity is a good buy. They don't offer opinions. All right? And they don't want the company expressing opinions in PPMs or S1s or SP1s or any of the other forms. It's a collection of facts, and the PPM should be a collection of facts. Okay? A law firm or lawyer experienced in private placements, all right? Like anything else, okay? If you go onto the cover of a deal and you see Goldman Sachs is the one who's the brokering agent, right? You see Fried Frank or some other well-known, respected law firm is the one who's done the legal work on this. And you see the former CEO of, Google or something like that is the CEO of the company. Those things make a difference, right? Because these people have options. Goldman has lots of business plans presented into it. It clearly rejects more than it accepts, okay? Fried Frank charges a lot of money, but they also have a brand name to protect, all right? The former CEO of a high-ranking company, he has options, okay? And if he or she chooses to work with this company, you've already seen some selection being done by people who had options to go ahead with this. If you see no lawyer associated with the PPM, if you see that the numbers are unaudited, so a CPA has not signed off on the numbers, okay, these are the things that start to make you nervous, all right? Limited infusion of capital in the stock market. Okay, one of the things you also need to figure out is whether or not the business plan is going to raise sufficient funds to get you to profitability, all right? So if this idea, let's say our great idea, we'll just beat the helicopter idea to death. Let's say that the great idea is the helicopter company, and let's say the helicopter costs, Robinson helicopter costs $400,000, and the PPM goes out there and says, well, due to limited demand in the marketplace, the financial marketplace, we're going to raise $300,000 on this round, and then we're going to hope to come back to the market in a year and raise the other $100,000. All right? All of a sudden, that's raising a lot of risk to you as the first round investor. Because if they're not raising enough money, okay, to implement the business plan, you already have a risk there, which is the risk they can't get the second round of financing done. Okay? So the other thing you want to do is make sure that they're raising sufficient resources to implement the plan. Okay? And here's a good number for you. Look how much money Thompson is saying was raised for private placements, $400 billion. Remember, the $200 billion was the amount going into private equity funds, right? But an equal amount of money is also just going directly from individuals, directly, without the help of professional into these investment opportunities, okay? Over 2,000 deals, okay? So, the benefits of a private placement, you got a lot of flexibility. Nice thing about not being registered with the SEC is you have many more things that you can say in a private placement memorandum. The downside of saying something that you can't necessarily back up with the financial documents or other things like that. The SEC, it's a real mess with the SEC. If you provide an S1 to the SEC and then you go out for 25 days and you market your deal and the SEC comes back and says, no,